So there is an adjustment connected with it was set number 2, payment in advance of an annual rent, 3 rent expense. The amount was 360. Okay, this must be adjusted, okay, because it refers to a period starting the 1st of April 2020, okay, until the 31st of March 21, okay. And here we have the middle, let's say like this, okay, we have the end of the period, 31st of December. Okay, this expense covers this period, so we can use it as a store. We can use that store starting in April this year until March next year. We would like to have this part of the expense impacting the income statement of the period, okay? Here we wrote the full amount, so we have to rectify this part for 3 months, so January, February, March, okay? So there are, we can say that to calculate it, we say 360, it is connected to, refers to 12 months, and we would like to see the amount that refers to that period or the part to be rectified as you want. That period is April, May, June, July, August, September, October, November, December. So there are 9 months. So 9. So it means that X is equal to, how much is it? Can you calculate, please? How much? 200 and? Thank you. 270. So this is the part pertinent to this period here. Okay, 270 here. And so the remaining 90 will be of the next period. So we want to write into the income statement this part as an expense of the period, okay, related to the rent of that store. To do this, to get this, we have to rectify the rent expense, writing here the amount of 90. So this is, I'm doing the adjustment, okay? First part of the adjustment, this is, and the second part is to involve the account prepayment. Prepayment. Prepayment, and I write 90 here. Okay, so that is the adjustment, okay, and this. 2 accounts, opposite sides, same amount. This is the prepayment, so the adjustment of the rent expense. As we wanted, we can see that at the end of the period, we will see that the rent expense will go into the income statement for an amount of 270, as we wanted. Now, look at another transaction to be, which is the next one to be settled, to be adjusted. Number 8. Yes, number 8. Okay. Number 8. The annual insurance premium. So you have among your account, you have the account insurance premium, having inside an amount of expense, insurance, we write expense, so it is easier, insurance expense for 1,200. Okay. It was like this. Okay. Coming from the transaction recorded. Now, this insurance is starting as a service from the insurance company, is starting the 1st of September this year, so 1st of September, year 20, and is an annual, yes, expense until the 31st of October next year. 31st of October 21. Okay. Here too, we wrote everything at the beginning. So, because here there was the payment, okay, and we recorded the transaction, but this transaction involves 2 periods. Okay, and this is the part affecting this, the economic result of this period. So we need to write into the income statement of the period only that part, this part. That is, if it is 1,200, it means 100 per month. So there are September, October, November, December, 4 months. So it means that 400, we would like to have 400 here. Okay, so the remaining 800 next period. Yes. Sorry, try again. Yes, it was a mistake. Yes, thank you. Thank you very much. I had to write here 31st of August. Is it okay? It was my mistake. Okay, very good. What's your name? Nicola. Thank you, Nicola. Okay, this one is 31st August 21. Very good. Okay, so 400 for September, October, November, December, and for January, February until August, so there are 8 months, 800. Okay, so we want only 400 this year into the income statement as for insurance expenses. This is too high, so we rectify this amount, writing 800 here. Okay, the amount that must be postponed. Okay, moved to the next period, so 800 here. Okay, at the same time, we write in the account prepayment, we already have it, 800 on this side. So here the adjustment is like this, 800, okay, reducing the amount of insurance expenses of that period, and this becomes 400 as we wanted. And here, the other amount into the prepayment account that will go into the balance sheet as an asset available. So you know that you will have this insurance protection, we can say, next year without paying because you paid in advance. Okay. Second, this was the second adjustment because we wanted 400 insurance expense affecting this period. The last one, it is the annual rent. In that case, we have a revenue to be settled, to be rectified. The annual rent of 480 received in advance. So looking at our accounts, we see an account that is rent revenue, having inside rent revenue on the right side the amount of 480. Okay, but this was received by, yes, because we gave an office that we were